Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 3rd of May. All right. Now, as we start just coming out of the North American session, the start of the Asian session. Now, once again, just the last day of Golden Week in Japan. Once again, the Asian session should be pretty quiet. There's not a huge amount of expectation with any upcoming data. Now, one of the key things that I'm sort of just seeing at the moment is, the majors are still drifting sideways. And this is pretty typical running into like the FOMC and or the US non-farm payrolls, right? So there's such big events and such big numbers that, traders' positioning is sort of jostled through the week. They square up and wait for these numbers to drop. So the major pairs at this stage, in my opinion, is they are all trading sideways. Euro, Aussie and Kiwi, though, they are starting to just drift a little bit lower. So they've had a slight correction across the board. If I just show you the charts here, you'll see what I'm talking about. They aren't exactly going down yet, but they are primed to go down. Right, so they've sort of, what we've seen is like the Aussie, we've seen that sort of down move, come back, basically form a new high, and then they are starting to drift lower again, even though they're within recent ranges. Same for the flightless bird, the Kiwi. Don't worry about dollar yen, it's more sideways. Euro's exactly the same. It's come back, had a nice little pop above 112 sort of 50, and it's now sort of trading lower as well. The odd one out, sterling, of course, with Brexit. But those three pairs, Aussie, Kiwi and Euro, they're the pairs that have the fundamental direction at the moment. So they're the ones that I'll be focusing on, and I would suggest that they're the best pairs to be trading. These ones here that do have a fundamental bias attached to them. Now, the main drivers, China-US relations, Brexit, those two geopolitical events, they are not in the news as much right now, but I expect the China-US situation to get into the major news. Brexit, well, it just continues. And that's where we are. So you look at upcoming events for today, building approvals. Now, this is a very low tier number, but you know what? The Aussie's under pressure, and it is starting to drift a little bit lower. So if these numbers come in exceptionally weak, and they are expecting really weak numbers, then this could actually start a lead to see the Aussie move. It's under 70 the figure at the moment, but down towards 69.5. It's a big call ahead of the non-farm payrolls, but weak numbers, could really sort of drive it lower. UK services PMI, well, as I've been saying, I'm putting the UK data up, but it's not really coming into play. So you'll have to wait and see what happens there. I like the CPI, the Eurozone CPI flash estimate. Now, this is the first look at inflation numbers in the Eurozone. Draghi's been telling us for some time now that growth is falling. If CPI falls, you'd expect Euro to keep drifting lower down under 111.5. And then all of the focus for traders globally, will be on the US non-farm payrolls. Now, just as a bit of a precursor to that, I just want to give you a look at the data here. So if I just widen this down a bit. Now, when you come into looking at the non-farm payrolls, don't get all bravado and think, and start, beating your chest and think, I trade the non-farm payrolls. This is a nasty, cranky release. It has a number of different variables, right? So if you're looking across the thing here, you've got the non-farm payrolls themselves. You've got the other payroll data. You've got the unemployment rate to deal with. And then also the average earnings data. That's the three sort of key ones. Of course, you've got these other couple of little variables, the payrolls, breakdown of the payrolls numbers in there as well. So there's so many releases. It's very hard to seriously get a trade on without knowing all the data. You can guess and go long or short after the number, but what invariably can happen is if you get one number that is strong, say like the payrolls number, so that comes out 220. The unemployment rate blows out by say 0.1%, so it's 3.9. That'll be a move up. That'll be a move down, and you'll be sort of licking your wounds, wondering where your cash went. Don't forget the average earnings has been one thing that the central banks are also looking at. So this has become a really convoluted release. Okay, traditionally you just look at the non-farm payrolls and probably and the unemployment rate as an afterthought. You wouldn't even be worrying about the average earnings. By taking out those variables, it becomes an easier tradable event. But at the moment, this thing is tricky. Now, the US dollar, if I just bring this back up, the dollar index, I should say, is, you're looking at, we've got a new low there that was formed during the week. Now, it's back in the sort of range. It is starting to sort of move higher. So this is what we're dealing with. It has to be an exceptionally strong number. It really needs to get above these highs up here to really get it rocking again. So above sort of 98, 30, 40. It's got a fair way to go to get this thing moving. Otherwise, it's just going to drift in the range. If we get really weak numbers, well, then once again, it's going to drive the expectation for possibly the next Fed meeting for some sort of dovish comments. But you know what? To me, the best outcome for us is really strong numbers. It really puts something under the bonnet. It gives the US dollar something to really drive for, and that should give us good trading opportunities, particularly on the pairs that already have some sort of fundamental bias. Dollar CAD top side and Euro, Aussie and Kiwi downside. These are the pairs that, to me, they're starting to trend, right? The trend's your friend. We just need the technical outlook to fit into place. And what do we need for that? Well, we need strong US non-farm payroll numbers, and that'll drive Euro lower. Well, actually, don't worry about sterling, but Aussie lower, Kiwi lower, and it will drive all these dollar pairs back higher again. We'll have trending markets very quickly should all these numbers come out strong, and that's what I'm hoping for. If we get it the other way, well, then we're back in the range and we're just sort of banging away again. It's not great trading conditions. All right, guys, that's it from me. Have a great trade day. Just hang out. I expect very, very little to happen ahead of the non-farm payroll release. All right, guys, have a good one. Cheerio.